Hello, good morning. You're watching Buy Now, Sell Now on ET Now. I'm Vinny Motiwala with me, Somit Sarkar as well. Somit, a very good morning to you as well. But not a good morning on the D Street. 21,900, we are below that mark that we were keeping an eye out on, and now it's at 21,871, fallen by almost 0.8% in trade from the day's highest point. Clear pressure that's come in for the markets today. Tight bit managed to come up at one point of time in the opening, but after that we just saw a fall after the opening. So let's keep an eye out on that. Now, what's sectors except for pharma? All the other sectors are trading in the red. Look at Nifty Pharma as of now, managing to hold on to almost 0.4% of trade of gains. But other than that, whether you look at PSU banks, autos, energies, FMCG, nothing exciting happening there. All of them are clearly under pressure. Individual stocks also today, a lot of them that we're seeing pressure coming in on is HPCL, Hindustan Copper, BPCL, Tata Power, among the F&O names that are down and out in trade. Other than that, we do have BEML, which is managing to hold on to gains. We have Sharda Cropchem, this is holding on to gains after its numbers. ABB managing to hold on to gains as well. There was a con call which happened today, so we're keeping an eye out on that. And Piramal Pharma, ESAP are among other names which are managing to hold on to some bit of a green. Today, what we're seeing is that clear pressure that has also come in on the mid and small cap space and the broader markets. That's seeing a sharper fall today, and that is what we're keeping an eye out on. Whether the mid cap or the small cap, clearly an underperformance that's coming from the Nifty mid and small cap, and all the stocks also under pressure. But Somit, we have Tata Motors, that reported their numbers, and that's also something that we are seeing a bit of a pressure today on.
Well, with Tata Motors, what is wrong is that it was not the numbers that were bad. The numbers were just a slight miss compared to what the street was expecting. It is just the outperformance that we have seen so far in the share price. Yeah. If you see in FY24, Tata Motors shares were up around 215% as against a 75% gain that we have seen in Nifty Auto. Now, why this outperformance was seen in Tata Motors? Because in the start of the FY24, the management had guided for JLR EBIT margins of more than 6%. Mid-year, they upgraded that guidance to around 8%, and actually they ended FY24 with a margin of around 8.5%. So this outperformance that was seen in the JLR business led to this outperformance in the share prices. Now for FY25, if you see, the margin guidance that the management has given is flattish. They are not expecting any big uptick in margin, and hence we are seeing this kind of a downfall when it comes to the share prices of Tata Motors in trade. It's down around 8.5% or 9% in trade, and that is largely because the guidance for FY25 margin is flat at around 8.5%. However, for FY26, the management is expecting margins to expand to around 10%. On volumes, they are cautiously optimistic, and what according to brokerages could lead to an outperformance in the share prices going forward, firstly is if the management again goes ahead and upgrades the margin guidance, and second is a sharp ramp up in the EV segment in FY25 could trigger the rally in share prices going forward. Let's also listen into the editor's take that we had today on Tata Motors.
It did well because of operating leverage. It did well because of financial leverage. It did well because they had this entire value creation process which they went on to, where they wanted to extinguish the shares of DVR, and then the global business did rather well for them. How many of those triggers are likely to extend into FY20 into FY25? Not all of them, and the large part of the re-rating in the stock purely on basis of earnings, numbers, margin expansion, that is behind us. So Tata Motor has been a ranked outperformer. That kind of an outperformance is unlikely to continue. In the near term, given what is happening to the global market in terms of PV, EV taking a backseat, domestic competition is also intensifying. While Tata Motor is enjoying some degree of leadership, I guess EV re-rating for them, I think, is already over, given that EV is still a very small part of where the Tata Motor portfolio is. I don't think the stock is going to collapse beyond a point. Why? Because that Tata Motor, there's another trigger which is coming, and that trigger could take another 8 to 12 months, is the demerger of the entire business into CV, passenger car, and other subsidiaries. Also, there is a buzz that they are looking at reinventing some of, reorganizing some of the companies. They took Tata Tech public last year. There could be an NBFC transfer and some more companies which could go public. So stock will be in news. But based on these numbers, there is nothing in the stock which will excite momentum. But the downside also will be protected largely because of multiple triggers which are based on M&A, which are based on demerger, which actually could protect and give you a downside for the stock. So I think from a massive outperformer, now the stock could become a market performer.
Well, that was the editor's take on Tata Motors. Kunal, what's your view on Tata Motors right now? After the 9% fall that we are seeing, is it coming into the buy zone or still further downside?
Well, it's still not coming to that buy zone, and typically after such kind of a sharp sell-off, we see at least 2-3 days of further correction to the stock price. But the good part is so far that the volumes have been much higher for Tata Motors as compared to the volumes which you've seen for the stock in the last 2-3 months on an average for the stock price, which means major part of the pain could be out into the stock price. It may not fall by another 10%, 9% like what we've seen today for the stock price, but possibly a residual correction of say another 3 to 5% could be something in the offing. So maybe closer to 920, 930 odd range, I think would be a very good buy zone for Tata Motors. Would be bullish on the stock price, and I think this leg of correction, traders should look at a buy on dips approach rather than a sell approach at current levels.
Okay. That's the word coming in on Tata Motors. We're surely keeping an eye out on Tata Motors. But yes, as of now, the stock in the last 6 months has managed to see some bit of a gain. Today, yes, clearly under pressure after its earnings that we're seeing for Tata Motors. But let's move on and, actually, let's get started with the query segment today, right? Firstly, Kunal is joining in with us as of now, and we do have Ashish who will be joining us shortly as well. But Kunal, I'm going to take the query with you since you're here with us right now. This first query we have is coming from Thomas from Kerala. Tata Power is the stock they're talking about. They have bought it at a price of 250 rupees per share. What should they do with Tata Power? Continue to hold or sell?
I think it's a fantastic chart. Yes, the stock has also corrected in the last 8-9 days by a margin of 15%, 14% approximately, from 460, 470 levels to now 400 approximately. But I think it's a phenomenal stock. It's done exceptionally well. Power as a theme also looks fairly attractive. So maybe one more round of correction could be in the offing. If the markets get into a volatile zone, we may see another 30-point drop for Tata Power. But I believe that it's a fantastic chart. I think if you've bought at 240, 250 odd levels, you have a strong buffer at play. Maybe what you can do is at closer to 375 odd levels, if in case the stock dips to that kind of a zone, that could be a good territory where you may look to buy additional quantity.
Well, the next query is from Badri, and he's holding around 30 shares of IRB Infra, bought at a price of 67.7. Kunal, he wants to know your short-term outlook on the IRB Infra as per charts. You can hold the stock for the next 6 months.
So I would not be very bullish on the stock for the next 6 months. I think again the stock which has done reasonably well in the second half of the 2023 calendar month, but I believe that in the last 3-4 months the stock has been a lot more sideways. It's taken a huge resistance at the 70 mark. I sense that maybe the stock could come back to the previous swing lows of 55, 57 odd mark before it forms a major bottom for itself. So would not be too much enthused. Let this correction play out. And if in case it comes closer to your cost price, that could be a good time where you may look to exit.
Okay, let's move on. And Kunal, this next query is on Jindal Saw. Swati Malu from Pune has 108 shares of Jindal Saw at a price of 539 rupees per share. What should they do with this? Continue to hold or sell it? And even for Pidilite, they're holding it at a price of 2,746 rupees. So what is the view on that as well?
So Jindal, I remember I think the stock was almost at 350, 400 mid of 2023. It was going through a strong uptrend, and from there the stock has made a new high. I think if I'm not wrong, it's made a multi-year, multi-month high for itself, crossing those levels of 550, 540 just recently. I think it's a very good chart. I would suggest to hold on to the stock. Same would be the case with Pidilite. Even though the stock has been a lot more volatile, but when you look at the historical context of Pidilite, the stock has been absolutely trending. So it's just that maybe recently the stock has been a lot more volatile. Maybe it's trying to just grapple through a lot of internal news flows or events surrounding, or finding a good support for itself. But I believe that it's a fantastic chart, and if you're a long-term investor, I think you should hold on to both of these names.
Well, the next query is from Sushil Pariyani, and it's on Piramal Pharma. He's holding around 2,000 shares of Piramal Pharma, bought at a price of 155. Kunal, how does this counter looks like? From 140, the share prices have zoomed to 160 in just a matter of days. Do you see more upside here?
See, I think what we can probably see for Piramal Pharma is maybe 1 or 2 days of mild pickup of price action, say closer to 160, 165 broadly is where I would expect a near-term target for the stock. But I believe that the stock ideally in this kind of a market scenario should come back to retest its previous lows of 145, 150 levels. So I think your strategy, if in case you are looking at this as a purely trading play, because the results action is out and the stock has given a gap up, the volumes have been much more higher. But then ideally these kind of stocks, they generally come back to fill their gap before they resume the uptrend. So if in case it dips down towards 150 or slightly below those levels, good time to average out further.
Absolutely, good time to average out further. That's the view coming in there. We're seeing a slight bit of a recovery coming in the market. 21,900 above those levels again is what the Nifty 50 is trading at. But we do have a new debutant on the D Street, that's indAshish, and that had a listing gain of almost 46% when it listed. So we're keeping an eye out on that one, but we are here joined by the management of the company to talk to us about what are they expecting going forward. We do have Manish Gupta, Chairman and Chief Executive Officer, as well as Suhas Prabhu, Chief Financial Officer at indAshish, joining in with us. A very good morning, gentlemen. Thank you so much for joining in with us. And surely a bumper listing is what we are seeing. So could you start by talking to us about the growth plans and the guidance that the company has going forward? Now you're listed, you can talk to us about some of the outlook that you have going forward.
Thank you so much. indAshish is a unique company addressing a very large market. The life science industry is a $1.8 trillion, north of $1.8 trillion industry, continues to grow. And in this very large industry, we work with all the top 20 global pharma companies, and even beyond them, we work with another 45 companies, which makes our total active customer base 65. And the transformation these companies are making by doing more and more outsourcing, shifting their budgets more towards more and more digital channels, makes us optimistic about our future as a company.
Well, if you see, so far the company has done around 13 odd acquisitions. How many more have been lined up for FY25, as now the company will be debt-free post this fundraise?
No, absolutely. The company is debt-free. We have significant amount of cash on our balance sheet. And more importantly, indAshish has been very good at doing acquisitions, identifying companies, integrating them, bringing and integrating people as part of their teams, taking some of the capabilities and tech as part of our solutions to have an enhanced solution for the customers and more value add to our customers. We have a fairly active corporate development team. Our front-end team members are looking at acquisitions, at potential acquisitions at any given point of time. And we have a fairly healthy pipeline. We will, whenever we find something which can enhance our capabilities, we'll do those acquisitions.
Right. So, as you know, what is your outlook in terms of, and how should one actually look at the margins going forward? What is the current margin rate and the sustainability? What is the outlook there?
So the margin, especially at a EBITDA level, has consistently grown from 18.8% to 21.9% in December 23. And we look at sustaining and growing the margins as we go forward. And another aspect, given the proceeds from the IPO would go towards retiring the loan that we have on the books, would also mean that our interest costs would go down to zero going forward. And that would also have a positive impact on our PAT margins. So we look forward to enhancement, not just in the EBITDA margins, but also our PAT margins should look a lot higher than today as we go forward.
Now, given that indAshish provides multiple services like contract research, contract sales, BPO, what is the kind of competitive intensity in each of these segments that you're seeing?
Yeah, so as we already know that this is a space where the spends are significantly high. The operation spends are more than $150 billion in the areas that we operate, and is projected to go towards $200 billion. And there would be competition when there are these large spends. But what we are excited is the opportunity in front of us, given that the market is ever expanding, the technology is ever evolving, and the needs of the consumers of our customers would also keep evolving, and that provides us a wonderful opportunity to get in deeper and become a much more credible player in the future.
Manish, and just before we let you go, if you could tell us which are the other markets that the company is looking at for expansion?
Today, as Indegene, we are a global company with a very significant global footprint. While we get 66% of our revenues from the United States, 30% from Europe, and the remaining 4% is split across multiple geographies, including China, Japan, India, LATAM. We will continue to focus on these markets, all the markets I spoke about, and support our customers globally.
Well, thank you. That was the management of Indegene. Moving from Indegene to Bank of India, the MD and CEO Rajnish Karnatak is joining us. So firstly, to start off with, let's talk about the provision number for the quarter, which has gone up significantly on a sequential basis. What led to this uptick, sir?
Yeah, if you see the provisions in this quarter, there are a provision of around 2,000 crores. It is a shade less than what it was in March 2023. This year, we had a provision in Q4 of around 2,000 crores as against 2,300 crores in March 23. The increase in provision is basically because of some aging issues in the NPA portfolio, number one. Number two, some NPAs also happened during this quarter, because of which the provision came. And some of the provisions we have made as a matter of prudence also in small ticket MSME accounts where the stock statements and all were not there. We have treated these loans, small loans, as unsecured loans up to the Mudra level, and we have made 100% provisions in those accounts. That is why the sequentially increase in provision you are seeing. But overall, if you see on a year-on-year basis, the overall provisions on bad and doubtful debts have remained at the same level.
Mr. Karnatak, just want to know then that can we expect the provisions to come down from the coming quarters, or will they stay at these elevated levels?
No, the provisions will definitely come down. Whatever the provisions or hit we had to take on the NPA side or provision we have taken in the Q4 quarter, Q1 will be much better.
Also, if you see, the cost of funds are remained elevated across the sector. Despite that, you improved your NIMs on a sequential basis. But going ahead, what is your internal estimates when it comes to the net interest margins? Any range if you could give us on that front?
Yeah, so as regards NIMs are concerned, on the global NIM side, we have closed our NIM at 2.97%, which is, I would consider, a healthy NIM considering the tightness in the liquidity which is there. On Friday also, if you see in the system, the liquidity tightness was a negative liquidity of around 1.77 trillion. Similarly, on the domestic NIM, we had closed our domestic NIM at around 3.34%, which is again healthy. That is another thing. The third thing that I would like to stress over here is, as far as Bank of India is concerned, so we improved our net interest income from 20,000 crore to around 23,000 crores for the 12 months, which is a healthy increase of around 14%. With that kind of increase, definitely we feel that in this financial year, FY25 also, our net interest income and net interest margins will stay protected at the levels which they are, considering the fact that there should be some easing of liquidity, which is tight at now. Maybe July onwards, there will be some easing and some moderation in the rate of interest also, on the yields also by the end of this calendar year.
Also talking about the advances and deposits then, Mr. Karnatak, what's the growth, we've seen at a healthy level as compared to other PSUs for the company? Can this momentum sustain, which we've seen, the healthy growth momentum in deposits as well as in advances? And how much growth are you targeting in FY25 then?
So on the global side, if you see for Bank of India, we have touched a business of total 13.23 trillion with an increase of around 10.11%. On the advances side, if you see, we have touched a business of 5.75 trillion on the global business with an increase of around 13.8%. And on the deposit side, we have touched 7.78 trillion, which is an increase of around 10.11%. So overall, there has been good growth for Bank of India. In this year, we had increased the total business by 1.38 trillion. And on the advances side, we grew around 69,000 crores. And on the deposit side, around 68,000 crores. For the current financial year FY25, the guidance is that we will grow the business at around 12%, with deposit growing at around 12 to 13%, and advances growing at around 13 to 14%.
And lastly, sir, your corporate book is almost 46% of the total loans. Infra loans itself are 27% of the corporate book. Have you internally assessed the impact of RBI's draft circular on the primary level on the bank?
Yeah, our risk department is working on that 3rd May RBI circular. Some feedback is also asked by RBI, which we have to submit by 15th of May. That we are in the process of doing. As regards the computation, ballpark number I can share, not on the figure side, but definitely on the percentages term. So what we see from our book also, the impact will be around 20% of the total in infra plus the industrial book where COD is there. So that would be around 20% only, because most of our book in infra and industry is already where COD is achieved and cash flows have started. So that part of the book will not be impacted. So if you read the RBI circular carefully, only two parts are impacted. One part is where the projects are new and where COD is yet to be achieved. Second part where the projects are already under implementation and COD is achieved. There also up to 3 years, the provision will have to be made as per the RBI guidelines.
Well, that would be all, sir. Thank you for joining us and giving us those insights on the future for Bank of India. With that, let's slip into a short break and we'll address more investor queries post that.
Hi there, you have tuned into Buy Now, Sell Now on ET Now, and viewers, this is the show where you get answers for all your stock related queries, and today to answer the same we have two of our very special guests, Ashish Maheshwari as well as Kunal Bothra live with us. And viewers, just to give you a note that you can connect with us live on a WhatsApp number that will be flashing on the top of your screen, and you can also write to us on our social media pages, that is X as well as Facebook pages, and we will try to take as many queries as possible. So let's get it started with two of our experts joining in. And the first query that I have, Kunal, is coming in from Neha from Bangalore, and she is holding Hindustan Zinc from a price of 406 rupees. What is the outlook on this one, and can she continue holding this counter for the next few weeks?
Well, I think it's good decision now to try and book at least partial profits over here for Hindustan Zinc. I think it's been an exceptional run for the stock. The concern for Hindustan Zinc could be that the indicators are now into an extreme overbought territory, and even if the market gets into any kind of a recovery, it could probably juggle into sectors which have been significantly underperforming. They could be buying into those sectors, and stocks in sectors where there is a strong bout of outperformance. That's where you might probably expect some sort of profit booking. So I believe it's a good strategy where you may look to book out at least partial profits, not 50%, but maybe 25 to 30% at least.
Well, the next query is from Alok Mangla from Delhi, and it's on two stocks. First is Supreme Industries. He has around 1,000 shares, bought 2 years back. Ashish, have you tracked this counter? Well, the second query is on Peninsula Land. He has around 5,000 shares of that counter. So any view on both these counters? Should one continue to hold both the counters or go ahead and sell? Ashish, the query is for you.
Yes, as far as Supreme Industries is concerned, we have seen very good set of numbers in March quarter from the company, and I'm expecting this particular business will continue to do well. We have seen robust performance in companies like Cellover, Time Technoplast, the stock performance, and ditto Supreme Industries. Slow and gradually, these companies will do well, which are into the plastic industry, because they're part of consumption theme now. So my suggestion will be to hold this stock. As far as Peninsula Land is concerned, instead of Peninsula Land, I'll prefer more a stock like Prestige Real Estate, or if you are looking for something in Mumbai based, then Lodha Developers is better bet compared to Peninsula Land, because they can give you much better return in this segment.
All right, Ashish, the next query that I have is coming from Venkati from Vishakhapatnam. He's a senior citizen and wants to have a take on two counters. Firstly is Rainbow Hospitals and the other one is IRFC. Do you believe that these are good buys at current market price, or maybe he should wait for some dip to enter the same? And if yes, then any entry levels that you can help him with?
The Rainbow Child Hospital is again a stock which has given really very good returns if you've seen this year to investors. And after almost 1650 mark stock, there's some profit taking happening in this stock also. But overall, this is a sector which is getting a lot of traction, number one, among the investors because the way purchasing power is going up. Yeah, like people can afford more and more private hospital care, and this is getting reflected in the stock price of Apollo Hospital or Medanta or Rainbow Children also. So, in my view, you can continue to. Uh, I beg your pardon. I think investors want to invest in this stock. So 1300 is a level to make a fresh entry into this stock because stock has already corrected from 50 week high quite a bit, but 1300 will be good level. As far as IRFC is concerned, in my view, as there's some correction happening in PSU stocks and railway stocks, etc. also. So just wait for another 5% correction in IRFC. Nothing wrong with the company. Only thing is, as the market sentiments are not conducive for railway or PSU stocks, so some correction you can further expect. Then you can make a fresh entry.
Well, the next query is from Sushila Bellari and it's on DB Realty. Kunal, she's holding these counter bought at a price of around 233. Should she continue to hold or exit?
We'll continue to hold on. I would believe that the stock has actually come back towards its 200 DMA or just about nearing the 200 moving average for DB Realty. So I would believe that it could be a good time where you may look to even average out. So wait out for maybe one more round of volatility. In case if the stock say dips down to 190, 192 odd territory, that could be a very good point where you may look to average further.
All right, that's the take coming in on DB Realty. But with this, fears, it's time to slip into a very short break. Don't go anywhere. We'll be right back to take more of your stock-related queries. Welcome back to Buy Now, Sell Now. Just marking the recovery in the markets then because Nifty 50 has recovered smartly from the day's lowest point. At one point in time, it was more than 200 points of decline, but 81 points of cut is what we are seeing on Nifty 50 and similar kind of a recovery on Bank Nifty, which is now down just 124 odd points. So a good recovery in the benchmark indices as well as the broader markets are supportive too because the mid and the small cap index have also seen a good recovery from the day's lowest point. But with this, viewers, let's get back to all your stock-related queries there. And the next query that I have, Ashish, is coming from Satyavini. He's a long-term investor and at this point wants to invest 4 lakh rupees in 2 bets from the infra space. If you can help him with the top recommendations from the infrastructure, the stocks that you like, and he also wants a view on IREDA. Is this a good time to buy this counter?
Yeah. First of all, as far as IREDA is concerned, again, this is a stock after big correction getting consolidated, and with that negative draft of RBI, also the stock has corrected, but now quite stable. But if you are a long-term investor, suddenly IREDA can be always a good bet. As far as other infrastructure sector stocks are concerned, I think a couple of stocks that you can look at for investment after this correction. First is Adani Port and SEZ, which is again a part of infrastructure, a good direct play to infrastructure spend in India. And this will continue to do well in my view in coming years because the kind of capex they have done, they will continue to grow their handling of tonnage, etc. So this is my pick number 1. And next pick which I like here is Dilip Buildcon Limited. Again, play for whatever the NHAI related projects are there and very good order book. This company is also having quite undervalued at this price.
The next query is from Kiran Kurhade from Pune, and Kunal, he wants to know your target for a couple of counters. Firstly, it's CSE, he's holding 1000 shares, bought at a price of 123. The second one is Poonawalla Fincorp, again 1000 shares, bought at a price of 420. He can hold these counters for the next 4 to 6 months.
Well, I would suggest to continue to hold on. For CESC, I think 157, if I'm not wrong, was the previous or the very recent high for the stock price. I think the stock should be able to retest and cross about those levels in the time frame of 3 to 6 months. For Poonawalla Fincorp, the only concern is that the near-term charts, and I've been tracking this consistently over the last few months, that the stock has been taking a lot of resistance at this 510, 15 odd mark. So there have been a couple of retests above the 5, 10, 15 mark, but the stock has been unable to surpass those levels convincingly. The volumes have been good, but the stock has been unable to surpass those levels. So if the stock breaks past, say in the next 2-3 months by this 510, 515 mark, then you can keep a much higher target of 550 to 560 plus for Poonawalla Fincorp.
All right, Ashish, the next query is from Sandeep Jain from Delhi, and he wants a take on one of the recently listed counter, that is Tatva Chintan. He's holding 200 shares from a price of 2,245 rupees. What is the possibility that he could once again get back his the stock to his buying price, or would you advise to average this counter at this point in time?
No, I don't think so. Now anything is left as far as from whatever the sharp correction we have seen in Tatva Chintan Pharma, that you are going to get back those rates. Even I will not advise to make a fresh entry or average at this price. In my view, whatever the euphoria related to IPO listing and oversubscription was there, this is over, and now we have seen continuous sell-off in such stocks. So I suggest you can exit from this stock, and better to enter into some other stock which can give you better return. So I suggest you can even put money into Quest Corp, where we have seen good set of margin improvement in this quarter and good set of numbers. Along with even you can look at Piramal Pharma, which again came out with very good numbers. So you can make a 50-50 mix of these two stocks and exit from Tatva Chintan Pharma.
The next query is from Nishi from Bangalore, and for long term, she wants to know whether she can buy BSE and CDSL at the current market price. Ashish, what would be your view here?
Yeah, BSE after that negative news, I think still is struggling to find its base. So I still suggest to wait for some more time for BSE. A good entry point will be 2,400. And as far as CDSL is concerned, I think this is much better bet than compared to BSE at this price point. CDSL you can invest at this price.
Right, Kunal, coming to you for the next query. This one is from Ravi Prasad, and he wants a short-term target and support for data patterns. He's holding 200 shares and his buy price is 3,000 rupees.
So I think it's a very good chart, because over the last 4-5 months or so, the stock had recovered from 1,800 levels to I think 3,000 plus mark, where the stock had made a fresh swing high. Yes, in the last 1 or 2 weeks, the stock has gone through a 8-9% odd correction, but I believe that it's in sync with the overall texture of the markets. I still believe it's a very strong chart. You should continue to hold on to the stock price. And in case, in terms of supports, 2600, 2650 is a major gap support for data patterns. If that level gets retested, you should be ideally looking to average out or buy more quantity. And on the upside, I would expect that whenever the markets stabilize, I would probably believe that the stock should come back towards 3,200 plus mark and into a fresh breakout mode.
Next query is from Anil Malhotra from Delhi. He has bought around 75 shares of Polycab at a price of 4,231. Ashish, what would be your view here? Should he book profits now on this counter or continue to hold this hold Polycab for long term?
No, I'll suggest to continue to hold Polycab for long term, and the way the March quarterly numbers were there, almost if we see quarter over quarter, almost 140 crore net profit went up. So this particular sector is all set to get reiterated. Polycab being number one company as far as cables and wires in India, this will lead this rally. And the way we have seen today, ABB, Siemens, Cummins, such stocks have moved. Polycab will continue to outperform market. So my target for next 6 months is 7,000 rupees. Stay invested.
Right, that's the advice, to stay invested in Polycab. But the next query that I have, Kunal, is coming in from Sridhar from Coimbatore, and he wants a view on Chennai Petro. His average price is 880 rupees. He's holding 300 shares. At this point in time, any stop loss and targets that you would like to highlight for Chennai Petro?
See, I think the major support now for the stock is around 750 mark. This was the low the stock had hit in the month of March, as well as I think just about closer to this level of 750 approximately. The stock had retested this in the month of January, which means that there could be a potential, if in case the sell-off extends for Chennai Petro, the stock may come back towards 750 mark. But then I would actually believe that that could be a good point where you may look to consider buying or averaging it out further, so that you can reduce your cost price, because the long-term trend still looks to be positive for the stock.
Well, that was the view on Chennai Petro. And with that, let's slip into a short break and we'll address more viewer queries post that.
Welcome back to Buy Now Sell Now. Let's keep it going with all your stock related queries then. And the next query, Kunal, that I have is coming in on Voltas. The query is from Kirthi Kayan. I guess he's writing to us for the first time, and he has 20 stocks from a price of 1,386 rupees. Is that a sell or hold at current market price?
I think it's definitely a hold for Voltas. Now I understand that the stock in the last 1 week has gone through a very sharp round of volatility. I think for 1500 the stock has come back to its sub 1300 mark, which means a decent correction of 15% approximately for the stock. But then when I look at the medium term charts, I think the stock has gone through a very strong kind of a breakout mode in the last 3-4 months. I remember I think recommending the stock when it was sub 1000 levels, just around Diwali 2023. So I would believe that the long-term trend, the medium-term trend still looks positive for Voltas. If the stock comes back to say 1200 mark or 1180 approximately, which could be another 8%, 10% lower from current levels, it could be a very good zone where we should look to average.
The next query is from Balakrishnan from Solapur. Now he has around 1200 shares of Indian Oil Corporation bought at an average price of 94 rupees per share. Now he's holding this counter for more than 1 year, and Ashish, he wants to know the long-term prospects for Indian Oil Corporation going forward, and should he continue to hold this counter?
As far as OFCs are concerned, I don't think so there should be any issue for holding any of these stock, be it HPCL, BPCL, where we have seen liberal bonus announcements also. So IOC is again a stock which has given quite a good return in last 6 months to investors. And I'll suggest to remain invested here with 6 months price target of around 180 to 190 again possible, because I am expecting the crude prices to remain subdued at least in this calendar year. So OMCs will certainly do well.
All right. The next query that I have, Kunal, is on Vedanta. KV Reddy has purchased 350 shares and his buy price is 277 rupees. Is that a sell or hold at this point?
No, I think you should hold on. Now, I think for the first time in the last so many years, we're seeing the stock coming closer to a breakout of a multi-year resistance. 400, 10, 15, 440 approximately, in fact, was 2022 high for Vedanta, from where the stock had sold off and corrected to almost 50% at that point of time. So it's made a very strong comeback in the last 2 years from the corrections for itself. So which means that we could be looking at a start of a major turnaround for the stock. I would suggest a hold.
The next query is from Neeta Gupta. Now she is a long-term investor from Delhi, and she has been holding Lend India, and she has bought this counter at a price of around 1000 rupees. So Ashish, should she continue to hold this counter or book profits, given the fact that she's already sitting on 8x of gains?
Yeah, quite remarkable gains you are sitting on. So I'll suggest that at least book part profit at this price point and shift your investment into some other stocks, maybe not in similar capital goods sector, but in electrical appliances sector. So at least 50% of your profit you can book now in Lende India and shift to stocks like Siemens or ABB even at this price.
All right. The next query that I have, Ashish, is from Peter, and he's looking to buy Titan at current market price. Will that be a good strategy? He's a long-term investor and wants to stay invested for the next 3 years. And if not Titan, do you believe that there are other opportunities where he can look at, and any name that you would like to highlight?
Titan has corrected quite a bit if you see in after announcement of their last quarterly numbers. Before this, it was almost at 52-week high of 3,800 rupees. Nothing wrong with the company, only one bad quarter. And as the gold prices are almost at all-time high, so this is the reason some slowdown is there in their jewelry business. But in my view, this is a good price point to look at Titan at 3,200 levels, because fundamentally company looks good after this correction, and in my view jewelry stock will continue to shine once this consolidation phase in market get over.
The next query is from Tushar from Delhi. He has around 100 shares of Motilal Oswal bought at a price of 2,600 and around 2,000 shares of Bank of Maharashtra bought at a price of 70. Kunal, what would be your short-term view on both these counters?
So Motilal Oswal as well as Bank of Baroda.
Bank of Maharashtra.
Bank of Maharashtra. Okay. So for Motilal Oswal, I would suggest a hold. Now the stock in the last I think few weeks of correction has come back towards 20 odd mark. It's a very good support point for the stock over the near to medium term. So my suggestion would be to hold on to the stock. Bank of Maharashtra could be a bit tricky because I think I would probably sense that it's a good time to make a switch from the mid cap or the small cap end of the PSU banks towards the more formidable one. So I think shifting towards a Canara Bank or Bank of Baroda could actually be a better strategy if you can make the transition, and assuming you don't have those stocks already in your portfolio.
All right, the next query that I have, Ashish, is from Anju, and she wants a view on two counters. Firstly, SAIL holding 800 shares at a price of 166 rupees, and she also has 400 shares of Zomato from a price of 185 rupees. Would you advise to add more at current market price in any of these?
In fact, Zomato is my pick number one at this price, and we have seen the stock almost at 52-week high. And this is a stock where FIs, DIs both have accumulated this. So this is one of the best stock in FMCG our consumption theme. So instead of SAIL, I'll give my vote for Zomato. In my view, this stock has potential to give at least 20% more upside in the next 6 months.
Well, the next query is from Poonam Anand, and it's on a couple of counters. Sterlite Tech, 400 shares she's holding from at a price of 146. TCI Express, 40 shares at a price of 1,245. Kunal, what would be your short-term view on both these counters?
So I'm not sure the rationale of why you've picked up TCI Express, because the stock in the last 2 years I think has been just consistently falling, and I think it's corrected from 2,400 to now 1,000 levels or sub 1,000, just about on the verge of breaking below the 1,000 mark. So not sure of the rationale because even the last 2 years of this correction for the stock, it's not yet broken past above the previous highs or any of the previous swing highs for itself. So that could be a point of concern, indicative that maybe the stock could continue to drift lower. So you'll have to be a lot more patient. I'm not sure of the news flow regarding the stock price or surrounding the stock price, but in terms of a breakout point, you have to wait out for the stock to come back about 1150, 1200 mark for the first indication that maybe a major bottom could be at place for the stock. For Sterlite Tech, I think it could be a good strategy, very similar to hold on to the stock as of now. It's formed the first swing high breakout on the short term charts, and now I think at current levels of 120 looks attractive for an averaging out.
All right, Kunal, once again a query specifically for you. This the viewer didn't write his name, but he's been writing to us for many times now. If you can just have a chart check on Stylum Industries. I'm not sure whether you tracked this one or not, but he's holding 125 shares at a price of 1,651 rupees. Will that be a hold at current market price?
Absolutely illiquid in terms of the stock, and don't track it, so I'll skip it.
All right, but with this, viewers, let's kickstart taking all your queries in the rapid fire session. And the first query that I have is coming for you, Ashish. Between Infi as well as HCL Tech, any of the bets you like at this point in time for a fresh investment? This query is from Subrata Mukherjee.
Yes, Infosys is a better bet than HCL Tech.
The next query is for Kunal from Anu here. She has around 1100 shares of NBCC, bought at a price of 126. Should she continue to hold or exit?
Hold.
All right, Kunal Avasti from Kerala wants to have your take on MCX. Any entry points for a fresh entry?
3550 could be a good entry point.
Next query is from Virendra from Jalna. Kunal, your view on Fusion Microfinance. She can hold this for 1 year.
Hold on, but average it out only above 550 levels, which could be a breakout point.
All right, Kunal, your take on UPL. Results due, and Janvi is holding 50 shares at a price of 583 rupees. What to do in this one? Hold, exit or average?
First time the stock has given a swing breakout. I think it could be an indication of positive results, hopefully. So with the rest an averaging out.
The next query is from Sandeep from Hyderabad. Ashish, your view on Olectra?
Yeah, hold.
All right, Kunal, one more query for you. This one is coming, the viewer didn't write her name. Okay, Abhimanyu is holding 150 shares of PVR Inox from a price of 1375 rupees. 1 year view on this one. Stay put or look for other opportunities?
Stay put. If possible, look to average closer to 1275.
Next query is from Shrikant from Hyderabad, and it's for you, Kunal. He's holding shares of Birlasoft, 200 shares, bought at a price of 450. Should he book profits or continue to hold?
Book profits.
All right, Ashish, your view on Bank of India. Vijesh Vishwanathan holding 5,000 shares, buy price is 143 rupees, intends to hold it for the next 1 year. Will that be a good strategy?
Yes, you can continue to remain hold.
The next query is from Rajendra from Goa. He has around 102 shares of Deepak Fertilizers, bought at a price of 797. He's sitting on a huge loss. Ashish, should he continue to hold this counter or just book its losses?
So I think you book losses and switch to stock like Marico, which can give you better returns.
All right, Ashish, your view on Petronet LNG. Supritam Chakravarti holding 350 shares, average price is 223 rupees. What's the long-term view on this one?
Yeah, long term, nothing wrong with the company. Continue to remain invested.
All right, that was the last query, viewers, that we could have in the Rapid Fire as well as on the Buy Now, Sell Now show. Thank you so much, Kunal, as well as Ashish, for joining us today and helping all our viewers resolve their stock-related queries. But with this, viewers, it's time to wrap this edition of Buy Now, Sell Now. It's a goodbye from me, Somit, and the entire team who put this show together. Thanks so much for watching, but don't go anywhere. Markets and Noon will take the action ahead.